Right. Do we go ahead and just start whenever, or do we kind of wait a little bit? I think we just start. We'll just start. Why not? It's the last
Yeah.
panel of the day. We'll just get things going. So my name is Julie Verhage Greenberg. I am the co-founder of FinTech Today. I was at Bloomberg covering FinTech before this, and I am honored to have Swati Bhatia with me, who is now at Goldman, leading a lot of their consumer efforts. And she was at a company we all know very well, Stripe, prior to joining Goldman about 4 or 5 months ago. So you switched gigs during the pandemic. That's a big move.
I did. Yes, Julie.
So for those that might not be familiar with, how Marcus has expanded since it was launched years ago. I remember, getting pitched on it just as a lending product. Wasn't very much consumer facing, sort of like Goldman never had much of a consumer facing arm like other banks like Wells Fargo, et cetera, had before. And this was sort of your big delve into that space. And you are obviously much more than a lending product at this point. So talk to us a little bit about how you guys have expanded and how you think about that moving forward, especially in a post-COVID area where it seems like, so much more is done on our phones even than it was just a year ago.
Absolutely. So Marcus is Goldman Sachs consumer business that started 5 years ago. It started with a personal loan product, like you said. After personal loans, we built an online savings and deposits business. We followed that with building, through acquisition of Clarity Money, personal financial management and budgeting tools, which is now known as Marcus Insights. We also launched Marcus Invest earlier this year, which is the portfolio management and investing platform backed by Goldman Sachs expertise of 150 years in investing space. And we are, of course, also the card platform underneath Apple Card. And we have checking, which we have declared that we are right now working on and will be launched very soon. So we are working towards building a leading digital consumer banking platform that meets customers' spending needs, saving needs, and borrowing needs. And that's the vision, Julie. Over the next few years, we will continue to focus on building products underneath these to meet these customer needs.
So what type of customer are you going after as well? Because there's a slew of challenger banks out there now. Someone like a Current that is going after more of like a Gen Z, like super young customer. You've got SoFi, which is going after a slightly wealthier customer. Chime, which is going after a less well-off customer that might be living paycheck to paycheck. What is the target Marcus user and how are you finding them? Like, where are they coming from as well?
We have two strategies. We are building products which are Marcus branded products. That is our website, our app, and all of these products that I described are direct to consumer. We are, customers come to us on our app, on our website, through, search, through our brand recognition, through various marketing channels and efforts that we've had. We also have a second strategy, which is through partnerships. We have Apple Card. We are building or working towards GM Card launch, which is also in market. And our aspiration is to embed our products in ecosystem of our partners and platforms so the customers can consume our products in context. And, we are working towards that being the ultimate vision, that consumers can use our products either directly or through our partners. We go after, our products are for everybody. There is a bend towards mass affluent customers who have aspiration to build wealth, who are attracted to Goldman Sachs brand, which is associated with wealth creation. We are building our products to be fully digital. So digital natives and Gen Zs are attracted to our products as well. So we see a very heterogeneous population that is in our current pool of customers.
Do you ever see a day where there would be a Goldman Sachs branch somewhere for a consumer to walk into, or do you think that's something that is just not going to be necessary? It can fully be automated online?
We are building a fully digital bank. That is our vision.
So during COVID, I would assume that a lot of your customers, had savings and everything, but they might have lost really good jobs too. How have their needs changed during that dynamic as well? Because I think that, obviously you guys do consumer surveys a lot and you're expanding a lot. So thinking in the future, what types of products Marcus might be able to offer and how that changed because of the pandemic as well.
Pandemic ended up being a huge tailwind for a business like ours, which is fully digital. Consumption of financial products during this time just really on the mobile phone really increased. So, and that's what we saw. The biggest thing that we heard from our customers during pandemic was, our online saving account customers wanted ATM cards. They wanted access, wanted to bring their paycheck in, wanted to pay bills from their savings account. So what we essentially heard was people asking us for checking features in the savings account. And we're working on that. I think other than that, what we've also seen is consumers have access to cash right now. And we are seeing very healthy payments on loans. We're seeing very healthy payments on card balances, which is great from customer standpoint. So overall, the need has been more want to consume it online, want to consume it digitally, want to consume the financial products in context.
Something you and I have talked about before is this war for talent, especially just given that you came from Stripe, which is a company that attracts really good talent and they don't leave very often either. How do you guys at Goldman Sachs think about attracting the best of the best to build what is a very ambitious idea?
Yeah, absolutely. Without a question, I would rather be in an industry where there is a talent war than be in an industry where it does not matter, right? For selfish reasons, for having fun reasons, for being surrounded by people who are talented. We recognize it. We really like it. We know that our success depends on people who actually break trajectories, right? And we take that very seriously. We also know that we are a talent magnet. We attract people to Goldman Sachs' name, to our brand, to the fact that we are a startup inside a really coveted brand name. If you look at me, I have joined recently. I've come from a really great company, and I was still attracted to Marcus as the mission of it, the purpose of it. And I think that brings a lot of people to Marcus. The idea of building financial services which can have generational impact, which can impact, I believe very strongly that financial services and health are two things which not only impact, one generation, it can have multi-generational impact. So we aim to create purpose. We aim to create energizing workplace environment, give financial satisfaction to talented people. That's what matters to most people. That's what mattered to me. I'll just tell you a little bit about myself and why this became a mission for me and a purpose for me. My father lost everything, his family, everything when he moved from, his family moved from Pakistan to India. So he grew up in extreme poverty, cleaning dishes in restaurants and doing all kinds of odd jobs his entire life. And he educated himself. And education loans, how he got through his life, changed life for me. I grew up in a one-room house and I saw what kind of an impact, good lending can have on individual and, lives. So that's the kind of purpose that Marcus Business is. And we end up attracting a lot of mission-driven people as well.
How do you think about also tying that into a strong, sustainable business? Because something that might be offering a bunch of these products that really do help people build wealth, you also have to think about making sure that it's sustainable, good unit economics for you as well. And right now, there's things that like lending and savings, I would assume there's not a crazy amount of overlap between the two, because oftentimes if you need to use something for a loan, you might not have enough money to open a savings account, for instance.
Yeah, I think the way we are thinking about our products, Julie, is we are not thinking of our business model at a product level. It is not about, I need to make money from loans and I need to make money from savings or from checking. We are looking at our business as we want to meet customer needs. We want to be part of our customers' life. When they think financial services, they think us because they see us as a smart friend and not an overbearing parent. They see us as someone who can advise them about their financial life. So we want to meet the saving needs of our customers, spending needs of our customers, and borrowing needs if they have them. And we are also thinking about a fourth need of our customers, which is optimizing their financial life. And imagine if someone has $1 extra, what should they do with that extra dollar? Should they pay off the loan first, or should they put it in the market? Should they put it in their savings accounts? We hope to be able to give that kind of an advice to our customers and build a long-term relationship, which becomes unit economics, good business model because of the strength of the relationship. Of course, proof is in the pudding, but that is the business that we hope to build.
Yeah, and I love that you brought in that whole personalization factor too, because something that I realized lately, I moved to Austin recently, and I also got married a few months before that, and not once did thank you. Not once did any of my banks reach out to me though, whether it be a challenger bank or a traditional bank, saying like, hey, you just had this major life event. Here are some things you need to think about. Which I understand is very hard for a bank to do, but it also feels like, I mean, I went through and I changed my address on all my credit cards, for instance. Like I haven't changed my name yet, so I get why they might not have realized that point of it, but it just feels like there's a lot of room for that personalization like you speak to.
Absolutely. I think personalization in how customers are contacted, how we understand what's going on in their life, and what kind of advice do they need. A lot of advice is also about retirement, right? Which is not that relevant to a 25-year-old. So how do we actually give the right kind of financial services, right optimization advice for people at different life stages is how we're thinking about it.
Yeah, and I feel like the way that you phrase it and deliver it to the consumer is super important as well. I'm thinking, for instance, there's a company that I know of called Ask Zeta, which is a joint checking account, sort of like a couples finances type app. And they, give you advice and tips and everything. And it's meant to be, so instead of me having to tell my spouse that we should do something, it's like, no, like the app told us to do this. Like, I'm not telling you that, because finances, whether personally or with a partner, is really, a sensitive topic for a lot of people.
Yeah, we call it collaborative banking. And we are, that's one of the foundational principles with which we are building the products. You've probably seen the Apple Card family card launch. Same thinking, which is financial products are not for just an individual when it's a family and everyone's life is impacted by what the financial services that are, being consumed by every member in the family. So we're thinking of it as a collaborative banking, relevant for the right life stage, or relevant for every life stage.
This is also a space that has been heating up quite a bit, both from, other banks recognizing this now, Jamie Dimon coming out and saying that banks should be scared of fintechs, and then challenger banks raising a lot of money to move quickly in this space. Being a part of a larger company that I'm sure has a lot of lawyers and things need to go through like X number of levels of approval, versus being at Stripe where, yeah, it's larger, but Stripe can move really quickly on launching products. And it's not because they don't have as much regulation or as much approval processes. It's because they have amazing talent that can just build things out quickly. But I guess what I'm getting towards is, do you worry that Marcus isn't going to be able to move fast enough?
So first thing I'll say, Julie, is that we do believe in building sustainable products, which are not going to have issues later. We may go a little slower in the beginning, but that's with an intent of not just putting a product out in the market. It is by putting a product out in the market, which is going to not have issues or hurdles later. So that is the approach that we take. I think regulation is meant to protect the customers, we have absolutely the same intent also. So we take regulation very seriously as how do we make sure that we are meeting the intent of the regulation, build the products to be sustainable. Having said that, I will also say Marcus is not at all slow. If you look at it as it's 5-year-old business, there is already loans, there is savings accounts, there is CDs, there is credit card, there is a PFM budgeting tool, and there is going to be checking soon. So it's, and there's Invest. So number of products that we have in 5 years, I don't think Marcus is slow.
Fair point, fair point. And it's also a very Stripe thing of you to say, because I remember the early days, Patrick and John ended up missing out on a lot of deals because they just wanted to build something that was so good that the customer wouldn't need to call in for service. It wasn't going to fail. And that's exactly what they've built. Like Stripe has an average of like 30 minutes of downtime an entire year, which is just unheard of.
Yeah.
So the other thing I want to dive into is you mentioned the partnerships that you've done earlier. The Apple is obviously the most prevalent one. How do you think about building that strategy out as well as building things internally and sort of owning the product end to end?
Yeah. We see these as two that are running in parallel strategies. For partnerships, we are looking at this as we will build bespoke products for the partners, large partners that we work with, right? So for us, it's we take each partnership as a strategic partnership, which has a role to play in our business, and we want to build products specifically for the purpose of the partner. So that's the approach we've taken to card partnerships so far. In building our own proprietary business versus embedding consumer financial products in partner ecosystems, we believe that consumers should have a choice in how they want to consume these products. If they want to consume them in context, which is they want to borrow while they are shopping, we should have that solution. And if they want to come do deposits, saving, investments, or borrowing directly from Marcus because they would rather work with a financial services brand, we will have that option as well. And to our partners, we're going to have both choice of white label products as well as products which are branded Marcus and managed by Goldman Sachs. So we see this as a choice that consumers have, choice that our partners will have, and we will develop our products to be ready for both kinds of consumption.
How do you make sure that Marcus is a brand that companies do want to partner with too? Making sure that you're easy to work with, that you're fast, that it's an easy integration, things like that.
You said them all. So thank you for setting it up that way. Yeah, I think for us, it's important that we do a few partnerships, but we are the partner of choice for these, right? Because we are building these products just the way our partner wants them to be. Like, it's fascinating to me. I wasn't here when it happened, but when Apple chose Marcus Goldman Sachs to build the Apple Card, I sitting outside was thinking about it, which is not a single line of card code existed. It was completely built from scratch. But the fact that there is strength of Goldman Sachs relationship in the market with the core business that Goldman Sachs has, to the ability to build from scratch with no baggage from the past, innovate and bespoke solutions has a place in the market, and that's the role we're playing.
So I know that you're in the office obviously right now, and you said
Yay.
It's the first time you've been in New York, where it actually felt more like New York than some weird version of New York that we've had over the past year and a half. So I know that this is a slightly weird question to ask, just given your lack of time in the office, but what are some things that you've seen during your 4 to 5 months there that maybe have surprised you from what you expected coming into it?
So two-part question, like, New York, being in the office, there is electricity, right? If I can use that word. A colleague of mine walked into my office. I'm, of course, shacking in a hotel across the street, and I didn't have to go anywhere. But we started this talking through something. We were on a whiteboard, started at 6 p.m. at 9 p.m., I had to kick him out to say, go home now, you have a family to go to. I just am going across the street. But the quality of conversation, the brainstorming, the creativity that you get when you meet in person is amazing. Things that I've noticed about being here, so different parts of Goldman Sachs are so many different businesses. It's like heterogeneous. I ended up on the trading floor yesterday, and it was just fascinating to me. Like, so many people, like just activity happening. There's a lot of fun that's going on right now, right? Little activities here, music here, food truck there. So we are all, I think, enjoying the go back to normal feeling that you have with coming back into the office. And, everyone who is here seems happy to be here.
I know we had a Fed meeting today talking about interest rates, and something that was a very big selling point for Marcus when they launched their savings account is they had an interest rate that was higher than basically anything out there. And it's still much higher than what the traditional banks are, but some of the challenger banks like H.M. Bradley and others have found ways to game the system is weird, but like gamify it, where if you save X amount in a month, you're going to get this % interest rate. And then if you don't save anything, you're only going to get like a 1% interest rate, stuff like that. How does that change not necessarily the landscape, but the marketing and go-to-market strategy for something like that? Because obviously at that point, while you're still much higher than traditional banks, there are competitors that are going to offer higher rates than what you guys are.
Very good question. Like you said, like our aim is not to be the top rate offering, but to be in the top 3-4, offering customers great value. So that is our core principle. But alongside rates, right, in financial products, this is my belief, what matters is that we are not going to create new financial products. What we create is every step of the process to be less friction, to be better, to be more delightful experience. So offering best-in-class service, a seamless user experience, and a strong brand is our core of our offering. That's what makes this a compelling offer to our customers. Go-to-market and strategies, marketing strategies, right? We are also learning and seeing the trends and working on our own version of how to make it compelling for the customers to come take a look at the products that we have and be attracted by the financial value that they get from overall Marcus experience.
Something else that has happened lately is venture capital firm Andreessen Horowitz recently just launched this new blog about technology and the future. And one of the posts that was on there on day one was that technology saves the world. And a counter argument to that is that technology can also break a lot of things and destroy a lot of things too. How do you find the counterbalance there, where you make sure that you're building technology and things in a responsible way that's truly going to better the life of the customer, not do something that's going to take advantage of them or make it so, you're not building it in a way that's very secure and, things like that?
Yeah, everything comes with two sides of the coin. And thinking through customers' needs first, thinking through transparency in the offering, those are the core principles, right? Which is before Marcus was launched, again, I wasn't here, but the team spoke with 10,000 customers before a single product was built. And since then, we've at least spoken with 100,000 customers subsequently to continue to learn how our products landing on the customer. Are they feeling like this is meeting some of their needs? This is truly a value added offering. And this is above and beyond what we hear in our call centers, which is the voice of the customer, best place to learn. So taking customer input constantly so that technology and all the solutions that we are creating are friends, and we keep that check through asking directly from the people we are building this for, that is this serving your need, is one way to do it. Now, taking care of tech risks is again, core and foundational. Building any tech business means that it has to be built for scale. I picked Marcus. I'll tell you very quickly. I became obsessed with the idea of building a digital bank. Right? You asked, I came from Stripe. No one leaves Stripe. It's a great company. Why did I leave? Question if it's on your mind. Like, I left because I just wanted to build a consumer digital bank. I felt like time is here. Time is now. There are new licenses being granted. There are so many innovative companies trying to, enter this space. And the reason I ended up picking Marcus was because I felt like it's a startup inside a big bank. It has the advantages of a big bank, which is ability to actually get scale, ability to do things right with right regulatory focus and scale focus while creating and disrupting. So it's a combination is important, balance is important. And inside a big company, the burden of making sure that we don't take unnecessary risks and technology sound and are the advantages. Like we said, it slows you down a little bit, but then speeds things up later.
Totally. So Marcus has been around for about 5 years now, give or take. If we were to have this conversation again 5 years from now, what are some of the things that would be talking about with you guys?
Hopefully in 5 years, or I know in 5 years, we will have tens of millions of consumers in our proprietary business. We will have products which do meet customers' saving, spending, borrowing teams and needs, and we've built this amazing, personalized, optimizing financial advice for the customers. We also have partnerships via which we are delivering all of these products. So what we will be talking about at that point is how did we do it? And, definitely how scale and speed both can happen in the same environment.
Totally. What are, in that same time frame, what are the things that you think is so crucial for you guys to get right, other than, truly knowing the customer, which it's very apparent that is most important to you, because you can tell you're passionate about that.
I think the business model sanctity of it being based on customer lifetime value is something I don't want us to lose sight of, which is don't want to do things which feel optimal for a product. Don't want to make money from checking my charging overdraft fee, right? That's not something we will do. That's not something that, so not changing the thinking process and thinking customers' lifetime value and relationship-based business model is going to be important.
Based on your few months at Goldman, as well as your time in Silicon Valley, what do you think is the biggest misconception about Goldman and Marcus from Silicon Valley that you've come to realize is not true?
I think it is, and it was also apparent in your question, right, which is this must be slow because there are lawyers and, compliance people or regulations make us slow. I don't think that's true. I think the regulatory arbitrage that smaller companies have, it only lasts in the early stages of building a career. Eventually, you just have to do things right. So there's a misconception that it is slower. There is also the misconception that it's not possible to build a startup or a fintech inside a large bank. This is very much that. So I would say that, I like to think of Marcus as in the category of one, a startup inside a very big bank, and it is possible to be both. I hope that myth gets busted, that it's not possible.
Well, it's on you guys to bust that myth, because you guys are the ones that are farthest along on that. And it seems like other banks have largely missed the boat on this as well and are trying to play catch up a little bit at this point. But that is it for today's conversation with Swati Bhatia of Goldman Sachs. Thank you everyone for joining us. I know it's after 5 o'clock in New York now. So go have a drink, talk about this conversation or other things you have heard at FinTech Connect today. And thanks so much for joining. Thank you, Swati.
Thank you for joining. Thank you, Julie.
Bye.